Okay, condos. If your buyer is looking to purchase a condo, they need to be aware that first, that condo needs to be warrantable. Generally speaking, that warrantable status is only determined after a condo questionnaire is provided by the condo HOA, which happens after you get under contract. Manufactured homes. Always make sure that your loan officer understands that this is a manufactured home that your buyer is trying to purchase. They will have higher closing costs. They need to be permanently anchored to a foundation. The hitch and axle needs to be removed. The skirt needs to be in good condition, the metal skirt around the property. It needs to be in its original location. It can't have been moved from somewhere else, and it needs to be titled as real property. This can be remedied, but it can slow down closing. Ideally, you have other manufactured comps. Barn dominiums, log cabins, and modular homes. Also, ideally, you have like comps. You don't have 3 normal homes to comp out a barn dominium. ADUs, that should be relayed to your loan officer as well. Is it attached to the property? Are you trying to get rental income out of it? This needs to be relayed. Can you use the square footage from an ADU? Talk to your loan officer about that as well. Occupancy is an important one. If your buyer intends to buy a property as an investment property, let the loan officer know upfront. This will change the down payment and the interest rate factors. Multiple units will change the interest rates as well. Duplexes have different pricing than single-family homes. HOA dues need to be reported, especially on condos and townhomes, as these can occupy a large percent of your buyer's debt-to-income ratio. Flood zone, flood insurance needs to be reported. If the home is currently unoccupied, especially if it's been unoccupied for an extended period of time. If the home is on a private road, report that. If it's a flip, right, it's been gutted and flipped within 120 days, any safety, security, or sanitation concerns. Property repairs should be reported as well, especially if they're utilizing VA or FHA financing. Multiple parcels could be an issue, especially if the home is straddling 2 lots. Also be aware, if your buyer is purchasing a home within the town limits of a home, there could be an increased tax basis. Large property lots can pose an issue, especially with significant agricultural activity. And finally, my favorite one, which is very, very rare, is if on a VA loan, that property is not hooked up to or is not hooked up to septic and town water, but is close to it. Report that as well. Okay, that's everything you need to be aware about, all the property red flags that should be reported to your loan officer to avoid any kind of calamities. My name is Steve Doherty. I'm a loan officer in Raleigh, North Carolina. I'm licensed to do mortgages in South Carolina, North Carolina, and Virginia. If you would like me to get your buyer pre-approved, I will leave my contact information in the video description and in a pinned comment. I look forward to hearing from you.